Hi, good evening everyone. This is Hareesha from H&B Premier Tax and Accounting LLC. I want to bring you another episode talking about very important tax topic, that everybody is asking questions about these days. I'm a CPA out here in Baldwin, Long Island. It's a Sunday evening, so I just spent my weekend researching and studying about this new law that came out, CARES Act. The CARES Act, is the act, the $2 trillion bill that the Congress passed in response to the COVID-19 outbreak. So what this act does is, it acts as a stimulus package to boost the economy and support a lot of businesses and individuals that are affected by this COVID-19 outbreak. So the CARES Act does a lot of things. So it's a massive bill, 1,000 plus pages. I'm not going to cover everything, but I'm going to cover one area that is important to every business owner. So whether that could be a business owner, I'm talking about anybody that has a business that employ less than 500 employees. For the majority of the definition, if you have less than 500 employees, you consider a small business for this, classifications. If your business happen to be in that category, so you want to, listen to this video and then pay very, very careful attention. So this is going to be like, almost like free money. There are some caveats like always. But if you listen to this video, you follow the rules, you act fast, you will benefit from this CARES Act provisions. What this special provision that we're going to talk today about, Paycheck Protection Program. So I'm going to show you how it works. I'm going to show you what you have to do exactly to apply for this grants or loans. And then I'm going to show you how you could get the loan forgiven, right? So pay attention, stay tuned. We'll see how this works. So you have to basically certify 2 things before you apply for this loan. Pro tips: if you don't certify these things during the application process, you will get denied. Number one, that the current uncertain economic conditions due to COVID-19 has created uncertain conditions for your business or financial difficulties. So the application for this loan is required. You need this money. So basically you have to certify that, and then also you have to certify that you're going to use this money to keep your employees and then pay rent and utilities and then interest and continue to run your business. Let's dive into it. CARES Act, that's a short name. The long name is Coronavirus Aid and Relief and Economic Securities Act. So let's just stick to CARES. That's much easier. So what did the CARES Act do basically to stimulus the businesses? So it expanded the SBA loan program. So it's expanding on an existing platform, because it's very hard to build new platforms when the disasters happens. These are large programs. Even Trump said that he never signed anything that has trillion on it, let alone 2 trillions, right? So this is historic, never done in the history of our country. So they are piggybacking on existing SBA program. What is SBA? If you don't know, that's a Small Business Administration. So a Small Business Administration is an organization that provides financing to a lot of small businesses to get through, to expand or get through during difficult times, things like that. So SBA has basically 3 disaster loan programs. One is business physical disaster loans. The second is economic injury disaster loans. So this is called 7A program. These programs were there already. So what the CARES Act did was it expanded the area that they consider as a nationally declared disaster area. Before, when a disaster happened, the government goes and say, okay, this is the declared disaster area. If your business happen to be in this disaster area, then you are eligible to take advantage of this financing program. But now the CARES Act made the entire US as a declared disaster area for the purpose of coronavirus support. So then they introduced this new program. It's called a Paycheck Protection program, which is almost an extension of economic injury disaster loans. But the difference between these two and this loan is how you go about it. So now there's a requirement to be fast on these loans. Before, if you have to get an SBA loan, my experience, I have done help clients, with many SBA loans. It takes time. It takes for a while, at least minimum a month, month to a few months, right? So if you're lucky, you could get it. If you have all the documents, you could get it done within a month. Now, the Paycheck Protection program, when the businesses are getting shut down, they cannot keep employees. They have to move fast. So that's why they created the Paycheck Protection loans that they had to fund within few days. Original SBA loans, you had to go to SBA to apply for them. So then SBA will take the application, verify everything, and then they will do the underwriting, and then you will get the loans. You could have also gone through the banks. They kind of had like dual structure to go about the loan. But Paycheck Protection programs, you have to go through a bank. The SBA has almost like 1,800 partner banks. So you have to get in touch with a bank, and then you have to apply for the loan through the bank. So if you go to SBA website, you try to apply for Paycheck Protection loans, you cannot do that, because that's not how it works. All right. So let's look at the timeline. So the Senate passed this law on last Wednesday, and then it went to House, and then House passed this law on I believe it's on Friday, and then it went to President's desk on Friday evening itself. So he signed into the law on Friday. So this is very new, and a lot of tax writers, authors, accountants, CPAs, everybody is studying this law actually during this week, and then I spent a lot of time doing that as well. So let's talk about Paycheck Protection program. So the Paycheck Protection program, this got like sweet terms. If you know anything about getting financing for small businesses, they're not easy. So you have to agree to high interest rates, difficult terms, things like that. But Paycheck Protection programs, when does it start? From February 15th to June 30th. That's the period that the program covers. Okay, so remember these dates. So this is called covered period. February 15th, 2020 to June 30th, 2030. So talk about sweet terms. So the interest rates could be less than 4%. Maximum, it could be 4%, but it cannot be more than 4% according to the law. And the terms, you could pay this loan over a 10-year period, right? So you could extend the payments for a long time. Now let's talk about loan criteria and rules. Okay, so when you talk about loan criteria and rules, how do you qualify? How do they decide how much you will get? All of that. So there are three basic things that you need to pay attention to. They're pretty interesting. There are a lot of new things that they never have done before. It came into law under CARES Act because those things were a requirement to support the economy because of the crisis that we go through. Now when you talk about rules, so first they give this loan to cover payroll cost. What is included in the payroll cost? Salary. Obviously, everybody knows salary is part of the payroll cost. That's salaried employees. If you have a fixed pay amount for your employees, so that's salary. And wages, hourly workers or shift workers, everybody. And then if you pay commissions, so they are included. Benefits, that includes health insurance premium, retirement benefit, plan payments like 401k matching contributions, the cafeteria plan, payments. So any other benefit payments that a company would incur to keep employees are included in here. The next, payroll tax. Payroll tax is part of payroll cost, which is significant. That's included. Then, interestingly, now under CARES Act, they have considered 1099 payments also as part of payroll cost. This is not done before, but it's a new thing in terms of calculating paycheck protection loans amounts, or how much loan amount that you would qualify for. You could include 1099 payments for their calculations. The next, S corporations owner's salary. A lot of my clients are S corporations, so if you know anything about S corporations, so as S corporation owner, you are required to pay yourself a reasonable amount of salary and pay the Social Security and Medicare taxes on that income. Now, if you own an S corporation, you paid yourself, that also included as part of payroll cost. Not only that, if you're a self-employed, you file a Schedule C. You don't have your business incorporated. You just have a business, or you work as a consultant. You file a Schedule C. So even yourself is included in this calculation. So your profit, Schedule C profit, is considered payroll for this particular calculations. So good point. The pro tips: if you are a Schedule C and you make money, right? So you should apply for this loan, because your profit is considered profit for this calculation. So any amount that you pay to yourself during this period could be forgiven down the line. So we don't know, but that's what it looks like at this point. Now the third, next one is payments to partners payments in a partnership. So all those things are considered payroll cost. All those things are considered payroll cost, right? Now, one restriction on payroll cost, let's say if somebody get paid more than $100,000 salary per year, so then you have to reduce that amount to $100,000, and that's the only amount that you could add to calculate the payroll cost. Let's say you have 3 employees that makes $50,000 each, and then you have another employee that makes $100,000, right? So 3 into 50 is 150, and another employee making 150. So altogether you have $300,000 dollars worth of payroll. But because there's a $100,000 cap for the maximum payroll amount, only $250,000 will be considered as the payroll cost for these calculations. All right. So that is the payroll cost. Let's move on to the next criteria, next rule for the calculations. So you get the payroll cost, you establish your payroll cost, and then next criteria is how much of a loan that you could get. Okay, how much dollars. You could get. Now, 2.5 times average monthly amount. Okay, so you establish your payroll cost, how much your payroll cost for a month. You establish it annually or quarterly, and then you prorate it to get the monthly amounts. So based on your monthly payroll cost, you could get 2 times average monthly payroll amount. So important, average monthly payroll amount. So how do you calculate the average? So you calculate the average going 1 year back before the loan is made, before the loan origination date. Like let's say you will get a loan on April 1st. So then you go 1 year back and then average it out to get the monthly number, and then you will get 2.5 times of that as the payroll paycheck protection loan. Now, what if you have a seasonal business, a business that you have employees only during a certain period of time? So then what you could do is you could go back 12 weeks. You could go back 12 weeks, either from February 15th, going back to 12 weeks, or if you want to elect to be that date as March 1st, so you could take March 1st and go backwards 12 weeks, and then take that amount, and then you will take the average monthly and then you will calculate the 2.5 times of that. Maximum loan amount cannot exceed 10 million. So let's say if a company has average monthly payroll cost of 200,000, right? So 2.5 times of that would be 500,000. So they could get a loan up to $500,000 with sweet terms. How cool is that, right? So it's very, very good. All right, we talked about the rule number 1, rule number 2, or the criteria number 1 and criteria number 2, right, to determine the loan amount. And then the third criteria is once you take the loan, how you could use the proceeds. You cannot use it for anything, right? You have some restriction how you could use the proceeds. So obviously you could use the proceeds to pay employees for payrolls, wages, or commissions, benefits, things like that. Anything that included in here. So you could pay, use the loan proceeds for that stuff. The second, you could use the loan proceeds for rents and utilities. So the whole idea of this is, by the way, to keep employees employed. They don't want massive layoffs. The government wants the businesses to keep employees, right? So think about it. So you give a loan that you could pay your employees, but you don't have money to pay the rent, so you can't operate the business, right? So that makes sense. So you could use these funds to pay rent and utilities, and then also you could use these funds to pay for interest. Very important. Only interest. You cannot pay the principal portion of any loans, right? So if you have debt obligations, so you could use these proceeds to pay the interest portions of those debts, but not the principal. Okay, be very careful, because there are restrictions when it comes to loan forgiveness. We will talk about that later. Now, let me give you a pro tip. Pro tip is when you get these funds, right? So if you have a good accountant, or if you hire an accounting firm, so you ask them to use a separate ledger to track this money. So there will be separate credit card account or bank account, so that or loan account, that you track this money and then you disperse this money out of that account. So that way, if there's an audit down the line to find out how you spend this money, then you could use those records to justify or prove how you actually disperse the money. And look, if you operate a very simple business, you don't have the luxury to have an accountant do all of that. Talk to your bank, open up a separate bank account, right? So open up a separate bank account. It takes few minutes, and then when the funds come in, so you deposit the funds in the new bank account and then write the checks out from that bank account, right? So the most important question that everybody wants to know: how much of this loan can be forgiven? I know some businesses are really impacted by this, and also I know some businesses they are set up to work remotely. They are affected by somewhat of this, but they're not entirely affected, right? So the big question is how much can be forgiven. So here's what the exact law says, and then I'll break it down. Here's the exact legal language from the law about how much you can be forgiven on this loan. An eligible recipient shall be eligible for forgiveness of indebtedness on a covered loan in an amount equal to the sum of the following: cost incurred and the payments made during the covered period. Again, an eligible recipient shall be eligible for forgiveness of indebtedness on a covered loan in an amount equal to the sum of the following: covered cost incurred and payments made during the covered period. We covered what the law says about forgiveness, right? So it has three things. Basically, you cannot lay off your staff. If you do, your forgivable loan amount will be reduced proportionately, right? So they have calculations, a few options to do that, laid out on the laid out in the law. I'm not going to cover that here, but if you have any questions, you want to know that later, always feel free to give us a call so we could help you with determine that. And then if you run a small business that you did not lay off anybody, you kept your staff, you are fighting through this with them, so then well and good, then you don't have to worry about that, because you did not reduce your staff compared to the previous year or compared to the previous period. And then the next thing is you have to have the loan proceed incurred for the covered payments, right? You have to have the loan proceeds incurred for the covered payments. You cannot take the loan and then spend it for something else, for example, like to settle another loan. You have to use the proceeds to pay the payroll cost, pay rent, utilities, or interest. Those are the covered payments. And then the third thing is you should spend the money. This is very tricky. A lot of writers have argued how this is going to work out. I read some articles from different law firms, different tax writers. Some of them are saying if you incur the cost even before you get the loan, that will be part of loan forgiveness calculation. Some say that if you spend the money after getting the loan before June 30th during the covered period, so then only that portion will be forgiven, right? If you get the money sooner, you will have a chance to spend that money for the covered expenses during the covered period, so potentially entire loan could be forgiven, right? So those rules and guidelines are yet to come out and be interpreted, so we yet to find out about those things. As and when they come out, we'll clarify those things. But that's basically the guideline. So my advice to you is a few pro tips. You want to get in touch with your banker, right? So a lot of banks are getting bombarded with a lot of questions and then online applications. But if you do have a personal banker, right, get in touch with that personal banker, so he or she could help you to navigate through the red tapes, or cut through the red tapes and get you to the front of the line and communicate with you if you're missing any documentations, things like that. So that's why I always tell a lot of business people to get to know your banker, right? If you're going to make money, if you want to grow your business, you have to know your banker. Now, next thing, get in touch with your accountant, right? So your accountant should have called you already, right? If you didn't hear from your accountant, maybe you might want to get a new accountant. But look, if you love your accountant, it's all well and good. But just give a call to your accountant and say, look, I want to apply for this loan. I need this kind of information, right? So then you have the information, put it together, and then get in touch with your banker. So I'm dealing with a lot of bankers. I have relationship with many big banks, small banks. I talked to some of the personal bankers. They said Chase, JP Morgan Chase. They said they're not even ready because this just came out Friday evening, right? So today is Sunday. Tomorrow, Monday or Tuesday, they will have some idea based on what I learned. They're going to come up with online portal that you could go and apply, and then if you put in the information there, so then you could talk to your personal bank and then get proceed from there onwards. If you enjoy this video, I want you to check out two other videos on our channel. One I did previously that talks about how to handle your financials during a crisis, and the other one how to post your mortgage payments, rent payments during this crisis time, so you'll get more cash flow. Check it out. Remember to like and subscribe our channel. You'll get more valuable information like this. Thank you. Stay safe. This information is for educational and information purposes only, not to be acted on. If you act on this information, we are not responsible for that. Talk to your advisors, talk to your accountant, talk to your banker, and then take it from there. But other than that, take this information and then learn from it, and then do your own research, and then use it. If you benefit, that's our goal.